Will silver and gold save you? They've provided protection for thousands of years. Our ancestors were safe holding silver and gold. But what about today? As we are in a time of geopolitical turmoil, financial turmoil, like none other in the last 100 years. And what about the big news going on right now, the banking crisis? I was blown away by a statistic that I heard last night regarding what's already gone on in the first 1/3 of the year 2023 compared to what we had happen in 2008. I think it'll knock your socks off as well. Let's get started right now. In the first 4 months of 2023, we have had 3 of the largest 4 bank failures in the history of the United States. But wait, there's more. That's not the astounding fact. But let's take a step back here. We buy silver, we buy gold, we buy precious metal mining stocks to protect ourselves in times of financial turmoil. You don't have your head in the sand. You're not part of the 97% of Americans, let's be frank, who, if we asked about the banking crisis, would have no clue what we're talking about. You have courage. You are ahead of the crowd already by just being willing and able to look at these issues. And it gets even more astounding, guys, when we look at the size of these bank failures. Let me read this to you. We had First Republic, $213 billion. Silicon Valley Bank, $209 billion. Signature Bank, $110 billion. That was in the first 4 months of 2023. That adds up to a little over $500 billion worth of bank failures. Do you know that during the great financial crisis of 2008, that legendary period that the America went through, the Fed saved us, the great financial crisis, the whole year of 2008, there was only $500 billion worth of bank failures. So yes, in the first 4 months of 2023, we have exceeded the entire year's worth of 2008 great financial crisis bank failures. This is a big deal. And we've got more banks that are in trouble right now. PacWest, as I speak, the stock's down like 90-something%. And people are speculating that they will be the next to fall. You probably know who Warren Buffett is, but do you know who Charlie Munger is? He's Warren Buffett's business partner and commonly accepted as being the brains behind Warren Buffett. He recently said that the banks are in big, big trouble. Their balance sheets are loaded up with commercial real estate loans, and they are not looking good at all. You and me, we're in this together. Heck, we're together right now, here in the basement. You chose to be here, and it's a real privilege for me that you're with me right now. I hope you get some camaraderie. You are important. You are special. Your thoughts matter. We can learn from you. Leave a comment in the comment section below. Please give this video a thumbs up. Turn on the bell notification and press all. That way you will get notified every time I put out a new video. You remember 2008? It was mortgage-backed securities that brought down some of the biggest banks. Now it's commercial mortgage-backed securities that are presenting a big challenge. That and the fact that the banks bought a bunch of treasuries when the rates were super low that just aren't worth what they were a few short years ago, thanks to the Federal Reserve raising interest rates. And the fact is, according to the Wall Street Journal and a research study done by Stanford University, that like half of the banks are almost illiquid, insolvent at this point. That if they had to liquidate everything, they wouldn't have enough value to satisfy all of the depositors. But we don't get to know that because you know why? I'm going to give you a little quick, simple accounting lesson. They changed the accounting rules. The banks, they don't have to recognize their losses. As long as they say, we're not going to sell these things anytime soon, we can just ignore the fact that they're only worth 70 cents on the dollar what we paid, right? It'd be like you buying some gold, right, with money, let's say $10,000 that you intend to use on a fancy trip a year later with your wife. You buy gold, it goes down by 30%, and your wife says, how's our trip fund looking? And you said, it looks great. It looks great. It's $10,000, right? No. The fact is you would have lost 30% of your value, but the banks, they get to engage in what's called Disney World accounting. They can just leave it on their books at what they paid for it and act like it just hasn't gone down in value. What about your gold and silver? How will they fare through all of this? Well, they've seen this monkey show many times over the last thousands of years. Fiat money printing out of control. Paper money, electronic money, heck, even a little unicorn fart dust thrown in there. Gold and silver always maintain their value because they're in limited supply and they're precious, and people have universally accepted them as a store of value for thousands and thousands of years. So the hens are coming home to roost within the banking sector, and at the worst time possible. We have geopolitical tension like no other time in the world. And on top of that, we have a debt limit, debt ceiling, debt crisis issue here with the United States government, who will soon be running out of money. All of this is occurring at the same time, and that could be explosive for the gold price and the silver price. First Mining Gold is a development company advancing two of the largest gold projects in Canada. Springpole in Ontario and Duparquet, located in Quebec, each already has 5 million ounces of gold reserves, but exploration initiatives are underway at both projects to find even more gold. First Mining is well-financed, has zero debt, and owns an interest in 4 additional Canadian gold development projects. What do you think's going on out there? I took Susie to lunch yesterday at this new little Mexican restaurant by our house. Nothing fancy. 2 lunch special entrees and 1 Diet Coke, because when we go out to eat, Susie always has to have a Diet Coke. That was a point of contention amongst us for a while. I can be a little overly frugal, but I've accepted the fact that most of the time she's going to get a Diet Coke. Nonetheless, $30 by the time we were done. Look, I'm grateful. I had the money to pay for it. Yeah, that's great. But as I was leaving, I thought, I'm not going to be heading out for too many more $30 lunches anytime soon. I thought about all the food I could have bought with that money at Aldi or something else. My point is, things are getting very expensive. The whole system is under a lot of strain. And I just wonder, a year from now, are a lot of these restaurants going to be open? We know Bed Bath & Beyond, they closed. We know Tuesday Morning, they closed. We know Federal Express recently announced they're closing their freight division. Things are getting very interesting out there. It might just be time for us to buckle up, Buttercup. We've had 3 of the 4 largest bank failures in the history of the United States. Those occurred during the first 4 months of 2023. Let that sink in for a second. And then it gets more astounding when we recognize those 3 banks, their combined total was more than $500 billion. That was higher than all of 2008's bank failures, and that was called the Great Financial Crisis. One thing for sure, we'll keep our head pulled out of the sand. We'll hold on to our silver, gold, even our precious metal mining stocks, because we know they represent timeless value. I'll see you soon. Be well.